Imagine you started investing in the year 2000. Everything was full of promise, technology was the future, and your money was growing every day. Until the dot-com bubble bursts. The news was filled with the collapse. Internet companies, the brightest stars, were plummeting. Your friends who were once jealous now breathed a sigh of relief. They said, "I told you so, the stock market is too risky. Pull your money out." But you decided to hold steady, and the market, slowly but surely, recovered. You felt so wise. Then came 2008, the global financial crisis. The world panicked. Banks failed. The market was awash in a sea of red. This time, even your family advised, "Son, get your money back. Safety first." Your heart was racing, but you tried to trust your long-term plan. And once again, after dark months, the market rose again. You thought you had seen it all, until early 2020. A global pandemic locks down the market, an event no one predicted. Everything seemed to collapse in weeks. This time, even you doubted. Maybe they were right, maybe I was wrong. But you held on, and history repeated itself. The market not only recovered, it set new records. The person who persevered through all those storms, from 2000 to today, isn't some legend. It could be you. And if you had simply invested $300 consistently every month into a simple index fund throughout those 24 years, with an average return of about 10% per year, today you wouldn't have $86,400 in savings. You would have an account worth over $300,000. That's not magic. That's the power of starting early, staying consistent, and letting time do its work. And I know this because it's the path I walked. I'm not a genius. I'm just someone who didn't quit. Maybe you're thinking, "Sounds great, but how? Which button do I press? Where do I open an account?" Don't worry. In this video, I won't just show you the why. I'll show you the how, step by step, simply, right on your phone, just like I did. And I promise, no complex jargon. Before we start, one safety rule. Only invest money you won't need for at least the next 5 years, and always have an emergency fund of 3 to 6 months of living expenses in your bank account first. First, we need a tool, a brokerage account. Don't be overwhelmed by the countless choices. In the US, think of names like Fidelity, Vanguard, or Charles Schwab. I'll use Fidelity to demonstrate because their interface is quite friendly. You can download the app, open an account in about 10 minutes. When opening the account, choose a Roth IRA account type if you want long-term tax benefits. Basically, the money you take out in retirement won't be taxed. If you want more flexibility, open a regular brokerage account. Next, you need to fund it. Start with an amount you're comfortable with, maybe $500 or $1,000. In the app, just find the Transfer or Deposit button, link your bank account, and move the money in. Step 1, done. Now, the most important part, the strategy. As a beginner, your strongest weapon isn't picking the hottest stock, it's simplicity. You don't need to be an analyst. Instead, let the entire market work for you. The easiest way is to invest in an S&P 500 index ETF, like SPY or VOO. Think of it like this. Instead of trying to pick the one perfect apple in a vast forest, you buy the whole forest. The S&P 500 index is the forest of the 500 largest, strongest U.S. companies. When you buy one share of SPY, you own a tiny slice of all giants like Apple, Microsoft, Amazon. Instantly, your portfolio is massively diversified. In the app, find the search bar and type VOO. You'll see its detail page. To buy, click Trade. Select Buy. For the order type, choose Market Order, meaning buy at the current market price. In the Amount box, you can enter the number of shares, for example, 2 shares, or the dollar amount you want to spend, for example, $900. Then Review and confirm. That's it. You are now an owner of the U.S. economy.
But it gets even better. Automation. The real magic happens when you make investing a thoughtless habit, just like contributing to a retirement fund. In the app, look for the Recurring Investments or Automatic Investment feature. You can set it up so that every month the app automatically takes $300 from your bank account and buys more VOO for you. This is how you dollar cost average, sometimes buying high, sometimes buying low, and completely remove emotion from the decision. You just set it and forget it. What about picking individual stocks? I know it's very tempting, but for beginners, treat this as a side activity. If you want to learn, allocate no more than 10% of your capital to experiment. That way, if you make a mistake, it's a valuable lesson, not a disaster. So, your plan for today is: Step 1. Open an account on a reputable platform. Step 2. Fund it. Step 3. For the first time, manually buy an S&P 500 ETF, like VOO, to get familiar. Step 4. Set up a recurring monthly automatic investment into that same fund. After that, what's your job? It's to live your life. Check the account once a quarter, not every day. Trust the math, trust history, and trust your own discipline. The path to financial freedom isn't paved with short-term miracles. It's built by simple choices repeated consistently over decades. And it starts today, right now. If you found this guide clear and helpful, let me know by hitting like and subscribe. We have so much more to share, from asset selection to managing psychology during market volatility. Let's build a solid future for ourselves, together. Thanks for your time. I'll see you in the next video.